Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. In today's video, I want to speak about gold because at the moment we do have quite interesting price action and structure. So first I will be covering the technical aspect, then we will go and see what we have when it comes to the order flow. Now, starting here from the monthly time frame, what we can see is that from a monthly perspective, the market is currently about to test, actually already testing, a very strong area of previous monthly support and demand, which is this previous support here, again acting as support here, which the market has now broken to the downside and is currently retesting it as resistance, because as you know, in the market, previous support, once it gets broken to the downside, it turns resistance. So currently we are facing and testing strong monthly resistance and supply. Now what we could expect here is a bit of a deeper test of this area, so a little bit more bullish price action to develop, but overall we would like to see the market at least try to reject this area as resistance. So basically we expect for sellers to step in and try to protect this area as resistance. Now, if we drop down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see that in all this impulse to the downside, there is one candle not related to the move, which is exactly this green candle here, which is currently acting as previous weekly support, which the market broke to the downside. At that point, it started acting as resistance here and is currently once again acting as resistance here. We can also notice how the market has just created this W formation. Now, in general, after the creation of a W, what you would expect is for the market to create a rejection to the downside to go and complete the pattern at the neckline, which is the previous resistance turned support. So here on the weekly time frame, what we could expect is a potential rejection lower for the market to go and complete this pattern at this previous weekly resistance turned support. Dropping down on the daily time frame, what do we have? Now, here on the daily, I spoke about gold a couple of times in the past. I spoke about it after the creation of this M pattern. I explained all the reasons for which we could see the market create this rejection to the upside, which the market created. And then after that, I made another breakdown explaining all the reasons for which after this impulse, we could expect a correction and the continuation higher. And by the way, I will link in the description these two previous analyses, so you can go and check them out for more free education. What we can also notice here on the daily is that during this impulse to the upside, the market created this red candle here, indicating how during this move, the market reacted at this area. And if we look left, we can see how this candle, which is around here, is lining up perfectly with the neckline of the W formation, which was already our downside target, which is basically this one here, showing how the market should definitely be attracted to this zone, which would also complete the W formation on the weekly. So if the market creates this move to the downside, it both goes and tests the demand that we have and liquidity that we have from a daily perspective at this red candle, and it would also complete the weekly W formation. So the market should definitely be attracted to this zone. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for gold, what we can see is that with the last report, we have seen a decrease of the net positioning going from 68k to now 64k net positions, with 6.8k shorts added with the last report from the non-commercials, which are the speculators, so the big players in the market, showing that even though the market is creating a move to the upside, so obviously longs are getting added. At the same time, we're seeing way more shorts added during the move to the upside, indicating that a potential correction lower is definitely a possibility. So how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection lower for the market to complete the weekly W formation at this daily red candle, which is also strong daily support. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, there's all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we use in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, past the testimonials, you will see that at the moment I'm running a special promotion in which you have a big discount on the upfront price of the program. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the timer goes to 0 and the offer ends. However, spots are limited, so if the spots get filled before the timer goes to 0, the offer will end anyway, and the price will go back to normal. So I do suggest that you take advantage directly from here. You can click here and join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I will see you in my next video.